Hello, everybody, and aloha. Really excited to connect with everyone again this week and let everyone know what we've been up to. As you probably know, you've seen our announcement. We're excited to present City Park in Atlanta. Fantastic investment opportunity. Bringing you this deal exclusively in partnership with our friends over at REM Capital and Robert Witzenthaler there. This deal, if you guys haven't already, please click the link below in the email here and go ahead and check it out. I'm sure you're going to enjoy taking a look at this asset. We're excited particularly about this one because it's cash flows on day one, which is rare these days in a lot of deals. And the distributions are going to begin about less than 30 days after we close in October. This deal offers, again, 100% bonus depreciation, as this is the last year to take advantage of that. And we're projecting that our investors could potentially depreciate about 60 to 70% of their investment amount. This deal also offers really exciting upside that we can build 8 additional units on the property. So we're looking forward to rolling this project out and partnering with you on it. Just want to remind everyone as well that we still have our additional opportunity at 301 Greenville Apartments in North Dallas. We closed that on September 2nd and already have rents coming in about $45 over our pro forma. So that's exciting there as those new leases are coming in. That deal, if you guys didn't already know, go ahead, check it out in the details below if you want to have a look at that one. It's a very high yield play in a rapidly growing area of North Dallas. We like that deal because they can't build anymore there. There's a moratorium on garden style apartments in Allen. We also believe that with the tremendous job growth in that area and having a median income for the residents there in that market, it's going to support the rent growth that we're making our assumptions on for the newly renovated units as we bring those to market. We've been working hard on these 2 deals, and you can see we have quite a few irons in the fire. So I'm going to tell you guys at this point of the year, we're most likely pencils down and not going to be bringing any more deals out. So if you are looking for that to get in on that 100% bonus depreciation and take those losses, these are going to be 2 fantastic opportunities. One's already closed, and the City Park will be closing before the end of the year. So we're going to take the time to get these deals closed and roll out the business plans of those 2 deals. Additionally, we feel like the market in the multi-housing space has kind of come to a bit of a pause. We're not seeing much movement among sellers in the pricing of assets. We're seeing that most sellers are willing to hold out for the market to come back up. Most of them are pretty serious about their pricing. And we feel that for the time being, most of those sellers that if they're under pressure, they're probably going to hunker down and wait till the market comes back up to meet their expected valuations. Potentially, I'm seeing that maybe like through December through February 2023, you might see some of those not distressed, but potentially motivated sellers come back around on some of the deals that we've been making offers on. And we're probably going to be excited to announce something new around that time. Well, if you've been paying attention, you've seen the numbers coming in last week. You know, we've got a second month in a row that inflation is slightly coming back down after hitting that 40-year high. So that's good news there. It seems like the Fed is doing what they're expected to do, right? Keep it right, raising the interest rates, as we saw, a 75 basis point hike again last week. And we want to ask, what does that have to do with what we're doing here at Groundswell Assets in the multifamily industry, right? Well, as those interest rates continue to hike, right, construction costs are going up, materials are going up, the cost of labor right now is about 40% higher. So that's causing supply chain issues with the material and labor availability, which is in turn resulting in longer time frames for multifamily developers to actually bring those units to market. So the constraint on new units coming to market is going to be driving the prices on the existing inventory up nationwide. As you know, if you've seen a couple of our last newsletters, we posted an article about there being a 4.3 million unit need to hit the market by 2035 in order to keep up with the demand. So we have way lower supply of inventory than is required to meet the housing needs of the United States general population. One thing we look at in the multifamily space is the replacement cost. So what does it cost to rebuild as opposed to build new, bring new units online? We don't want to pay more than that. But the way this correlates with the single family home market and our rental units, because the cost to build new is driving up those home prices. So we have a lot of people that we've noticed are abandoning the idea of homeownership at this time and moving towards rentals. This is driven by the interest rate hikes you're seeing and driving up mortgage rates, and it's actually affecting the affordability of new home ownership because the cost of that mortgage is more significant than it was previous. That's not going to be around forever, but the current environment is providing more folks looking at our rental units as opposed to owning their own home. Again, this correlates directly with what we're doing as the housing market. It's not really collapsing right now, but it is pulling back on the deliverability and driving up those home prices, and we can directly benefit from this as we attempting to navigate this interesting economic time. So we're going to stay on top of things and continue to bring updates as we focus on the data and try not to get too caught up with all the hype, so we can keep our head on straight and be prepared to take advantage of the opportunities ahead as they present themselves, such as these two deals that we've picked up recently, Greenville 301 and now City Park in Atlanta. So encourage you guys to check those out. If you're interested in expanding your education around the multifamily space and learning more about active or passive investing, I encourage you to click the resources tab on groundswellassets.com, go to the education page for our weekly wave. We got educational blog posts we're bringing out every week from our team, and be sure to check out the investor tools to assist you as well. In the meantime, it was great connecting with you here, and I hope you guys have a great week. I look forward to talking again soon.